Hello traders and investors, this is Sal for SLTG Options Trading, and just wanted to do a video here. Great moment in time to do a video on the gold and silver ratio. And if you're not familiar, a little background: gold and silver ratio, what this is a measure of is a relationship between the two metals. What you do is you take the gold and you divide it by the price of the silver. So right now gold is about $1,500 after a small drop, and silver is about $34.50. So if you divide an ounce of silver into an ounce of gold, it'll tell you how many, because silver is smaller and because it's the denominator, it'll take 43 1/3 ounces of silver to buy 1 ounce of gold. Okay, now that's a lot lower or fewer ounces of silver than it used to take when silver was down quite a bit more. In the end of 2009, it took about 80 ounces of silver just to buy 1 ounce of gold. Now you could do it with about half of that, 43 ounces of silver. So at the peak of the panic, when silver was really beaten up at the end of 2009, the market bottom, it took 80 ounces of silver. So gold was outperforming silver by quite a bit. Right now, silver has been outperforming gold. Even though they've both been rising, silver has done better. Now, the other thing I'm going to compare this to is a couple other currencies, mainly the dollar and the euro, so you can see what this relationship might be telling us about the other two currencies. So keep in mind, silver is a riskier metal, has a higher beta. It moves in reflection of the market and the demand for the riskier metal. Easily you can go to 59 just because there's a moving average there. You can go to 50 and it would still be in a downtrend. So just keep in mind that maybe you would want to prefer gold over silver. Maybe you prefer neither. Maybe you think the relationship continues to go lower. But I'm just pointing out those facts. Let me jump over. Remember that at the end of 2009, the gold to silver was high, and recently it's been very low. In fact, very new lows, or breakout lows, breakdown I should say. Should look similar to this dollar chart. So dollar was also very high at the end of 2009, and it was very low up until recently. So I'm going to jump back again. High gold to silver, end of 2009, low gold to silver in April. And you've got a similar relationship. Now you've got a lot of wackiness in the middle, which you also have to a lesser degree in the relationship of the metals. But what could be implied here is if euro dollar, whatever they do, they're going to probably move together with the gold and silver ratio. Here is the euro, and it recently has some weakness because of the debt concerns because of Greece and some of the other countries. So if it does pull back, which technically it could, you could see a rise in the dollar because it will be a safe haven. The dollar can still be in a bear trend, can go all the way to the 80 level on the dollar index and still be bearish, where it can be resold. It could also go to 77, bump its head and go lower. For all we know, it could go lower from here. But technically speaking, lower highs and lower lows, the nearest lower high is around 80-81. So that's something to watch out for. I know a lot of sellers like the 80 level. But to me it's just quite interesting how that relates to the gold and silver relationship. Right now, if you're dumping silver to buy gold, if you're keeping them both, or you're just watching the relationship, you may also want to look at the dollar and the euro, because it seems as when there's fear in the euro, there might also be fear in silver. If the dollar outperforms, so might gold, because they are seen to be less risky, lower beta, safer assets. Keep that in mind when you're positioning yourself going forward. Okay, so that's just a little bit on the gold and silver ratio. If you have specific questions, we can give you specific answers. Go ahead and give us a tweet, an email, a call, and we're happy to answer any questions. Be safe, take care, and good luck out there.